All right, good evening, everybody. It is Wednesday, February 8th, 2023. A lot to talk about tonight, team. It is a Wednesday, so we are already halfway through the week. Markets were under a little bit of pressure today, with all three of the major equity indices finishing in the red. We had the NASDAQ, the S&P 500, and the Dow Jones Industrial Average all finishing in the red today. There's a couple things that we need to talk about. I think we're going to start off the night with talking about Disney. Now, Disney, ticker symbol DIS, reported after the bell. It was actually a pretty good earnings report. I thought they reported a pretty good quarter. They're up about 6 points after hours. That equates to about 5%. But guys, what is the major theme that we've been seeing this earnings season? I think you guys could guess it before I already say it. But it's more job cuts, right? More layoffs. Disney, the big headline announcement, Bob Iger is announcing about 3% of the company is going to be laid off, equates to about 7,000 jobs. Now, it's not a big deal, right? But I don't really want to downplay it either, because it's an emotional time when people get laid off, and I think we need to be cognizant of that. But at the end of the day, I don't think it's a call for Armageddon. I think it's pretty normal, and we've been talking about this almost to the point of ad nauseum on Walks on Wall Street, that, look, once the Federal Reserve started to raise interest rates and we have a massive seismic shift as it relates to monetary policy, going from accommodative stature to more of a, I would say, non-easy monetary policy, going from quantitative easing to quantitative tightening. The easy money train has definitely come and gone, leading many companies to do the normal thing to, look to increase operational efficiencies, trim the fat, for lack of a better word. So we'll talk about Disney's earnings report. They did beat on both the top and the bottom line. Earnings per share, EPS, came in at 99 cents. The majority of analysts on Wall Street were predicting 78 cents of EPS. Revenue also beat. Good top line on Disney, $23.51 billion. Pretty impressive versus the analyst expectations of $23.37 billion. Now get this, let's talk about net income. So talking about profitability here. Disney raked in $1.28 billion in the quarter versus about $1.1 billion last year. Now, we're going to talk about this tonight, but think about all of the, I would say, the verbiage on Wall Street and on Main Street as it relates to recessionary conversation, recessionary talk. Now, think about Disney's main core products, right? You could think about the Parks and Recreation, the Entertainment Division, and ESPN. Not necessarily businesses that you would think would thrive in a recession. So we'll talk about that later. Also, we got to talk about home builders, okay? We're coming off the back of not one, not two, not three, consecutive 75 basis point rate hikes, with an additional 25 basis point rate hike that was just put in place, bringing the federal funds rate to about 4.5 to 4.75%. That 30-year fixed rate mortgage is trading right at about 6.5%, which should continuously put some pressure on the housing market. And if you notice, take a look at some of these ticker symbols here, and we're going to be talking about home builder stocks, so new home sales. Take a look at ticker symbol KBH, ticker symbol TOL, ticker symbol PHM, and then DR Horton, ticker symbol DHI. A lot of these stocks have been acting really well, and we've been covering this, but they're pulling back now, very highly extended from the 50-day moving average. I think a lot of these stocks will continue to pull back and form a handle here. And last but not least, guys, we got to talk about the State of the Union address. I don't want to get too political, but I think it's appropriate to talk about it a little bit because it does impact markets. So I've selected one topic to talk about, which is going to be taxing share buybacks. We've already talked about the 1% excise tax that is already put in place on all new share repurchase programs starting the beginning of the year 2023. But it seemed to have not stopped a lot of these oil companies. I think it was Chevron that announced their all-time record whopping share repurchase program that will be subject to that brand new 1% excise tax from the Biden administration. Guys, that's all I got, man. That's all I got. So more importantly, let me wrap up here. Such a busy day for me today. I got stuff all over the place. And we'll say hello to everybody in the chat. We're reporting live from Billionaires Row tonight. This is the WeWork on 57th Street. Let me say hello to the whole team here. I see Robert, Richard Vogel, what's up? Good to see you. The Mighty Bull, Dusty Cole, FredX, welcome, Ryan Beck. Yo, Ryan, good to see you, man. Yeah, I appreciate that. Ryan Beck says awesome stuff on the New York Stock Exchange closing bell. For those of you who don't know, I was super fortunate enough to attend the closing bell ceremony on Monday, was it? Yeah, it's already, can't believe the week is almost gone. But yeah, extremely thankful for that opportunity. Amazing opportunity, by the way, to be able to see the New York Stock Exchange, the floor of the New York Stock Exchange. Fantastic stuff. But I'll see you guys on the other side. Just gonna tie my shoe here. All right, let me see if I could turn off the Wi-Fi here. So we are now coming up on the beautiful Billionaires Row, guys. This is West 57th Street and 6th and a half Avenue. We are reporting live outside of the beautiful 157 building. Now, as you know, this is my personal favorite building here in I would say New York City in general. My number one favorite building is the Seagram building, but right here on Billionaires Row, here it is. 157, this is the building that kicked off the entire trend of the Billionaires Row, you know, decatall, megatall, ultra-thin skyscrapers. This is actually developed by the Extel Group. And right next to it, Central Park Tower is the newest addition here to Billionaires Row, which is also developed by the same exact company. There's obviously the Hyatt Hotel on the right side. And then on the left side, we have 157. Now, we've been talking about Hyatt, ticker symbol H. It actually hit a new all-time record high not too long ago. I think yesterday. Stock pulled back a little bit. But team, tonight we're going to be walking down 57th Street to Columbus Circle, 59th Street. And then we're actually going to be taking a right and headed uptown. I think we should explore the Upper West Side of Manhattan tonight. Usually when we're in New York City, we tend to, you know, walk around Midtown, sometimes go down to Wall Street, but I don't really get to go up to the Upper West Side as much as I'd like. So I think that's what we're gonna do today. I see my good pal Dusty Cole. What's up, Dusty? Welcome. Thank you for joining us on Walks on Wall Street tonight. Dan Zhang says, hey Tom, how was your day? Dan, it was a very good day today. Got a lot of stuff done. Extreme volatility in the markets. Now, Dan, did you notice for the first time, and I posted this on Twitter, and we're actually going to talk about Twitter tonight because anybody else experiencing an outage with some of the major, I don't know, I'd say social media platforms in general, Twitter, major outage. You can't send tweets, you can't send direct messages, nothing. And I think for a time also YouTube was down a little bit, wasn't it? I was seeing a lot of chatter back and forth there. But a lot of volatility. The VIX is still in the teens, but for a brief period today, we actually traded at 20. And if I had to bet, right, I usually don't like giving predictions. I think we'll see a pretty harsh spike in volatility over the next coming weeks here. I think we should be able to see the VIX in the mid-20s, maybe 25 to 30. I think that should be interesting. Hey, Disney Hatch is here, says, yes, Tom. Twitter and Instagram were down. I think Twitter still may be down today, right? Got the FDNY. Hey, Chris Beeman is here. What's up, Lizzie? BNB 420 says, thanks for the chat tonight. Cheers. Good to see you. Oh, Raj. Wow. Says, I was having issues with LinkedIn as well. Now, okay, I got a weird, I'm not. I don't want to say conspiracy for you all. This is the Carnegie Hall, by the way, for those of you who don't know. Now, one of the things we're going to talk about tonight is layoffs again, right? Because if you were listening to the Disney conference call, Bob Iger, he announced 7,000 jobs will be cut. Unfortunately, at Disney, it's about 3% of the workforce. But think about what we've been talking about on Walks on Wall Street as it relates to layoffs specifically. It's been hitting the tech sector, big time. With Amazon, massive layoffs, I think 18,000 employees. Microsoft, Twitter. I think Twitter laid off about 70% of their workforce. We'll wait till the FDNY truck goes by. I hope everybody's all right. This is the second truck that came by. So here, it may be a little bit of a coincidence, but what do you guys think? So we had Raj in the chat say, Tom, I was having problems with LinkedIn. Everybody was having problems with Twitter today, and Instagram. So what do we notice a relationship here? Well, Twitter, big tech company. LinkedIn is owned by a massive tech company, Microsoft, ticker symbol MSFT, and Instagram, owned by another massive tech company, Meta. I can't stand calling it Meta, you guys know that, but we'll do it anyway. Mark Zuckerberg's Facebook. Is it too much of a coincidence to say that all of these outages are happening during times when maybe senior engineers are being laid off en masse at these companies? Or do we think it's just a normal sort of outage? Because I don't know. From my experience, I think these layoffs may have something to do with it. Working out the kinks when some senior engineers get laid off at these companies. Sometimes it can create massive confusion at the company because some engineers are working on different projects. Those projects don't get handed off to the right people. There's confusion, there's infighting between teams, and it can cause some outages. So I don't know, what do you guys think? Beautiful look at Central Park Tower here. Once again, we are going to be heading uptown. I think we're going to take a look at Lincoln Center tonight. Flat Smacks is non-essential. Bree Graham says, yeah, people are revenge outing apps. You think so? I don't know about that. That's crazy. London Lee says, evening, Tom. Since early 2020, things that are going on in the world seem strange. Yeah, I would say that, my friend. I would agree. Michael Joseph says Chinese retaliation for the spy balloon. Maybe, who knows? Now, there was some information that came out today from the Pentagon that they've detected more of these balloons over Latin America. Anybody hear that? RP says Google Alphabet got hit today. It did. Now, not to go off in too many directions, but if you pull up a chart of Alphabet, right, Google, ticker symbol GOOGL, and additionally pull up a chart of Amazon. Now, we've been talking about this. A lot of these stocks have massive amounts of overhead supply, right? A lot of these tech stocks have been getting bombed, getting crushed, down anywhere from 25-30% as it relates to the big mega caps. When you're talking about some of the smaller caps or micro caps, these things have been getting wrecked 80-90% quite literally. So that creates a lot of overhead supply in these particular names. So if you put a 200-day moving average on a chart of Amazon or Google, notice where we're selling off at. We're selling off right at that 200-day moving average where a lot of supply tends to come back on the market. Kind of interesting to see. Hey, Harry Connor is here. Susanna Q4, welcome. I see my good friend Hawaii is in the chat too. Good to see you, Hawaii. Steph UH, welcome. John Bader says, evening, Tom and chat. Looks like beautiful weather in New York. It's a pretty nice night out tonight. It was about 50 degrees all day. Now, we're looking at the Trump International Hotel and Tower. This is one of the many 5-star hotels we have here in Manhattan. But on the right side, I think it's the top 20 floors are actually private residences. You can either buy or rent. And they are extremely, extremely beautiful. In the ground floor of the building, there's an indoor swimming pool, there's a full-size gym. There's a spa. It's a really, really nice building. And I'm actually going to take you guys on a little bit of a walk past that right now as we cross Billionaires Row. And if you look all the way up, you could see the top of 432 Park Avenue, which is another great building on Billionaires Row. Maybe we'll walk over that way tomorrow. Richard Vogel, welcome. Let me try to read some of the comments. We are not on the new streaming software yet. Yeah, love. So we have to acknowledge that for a second. So Love is Kind is saying, he's talking about the earthquake in Turkey. That's almost surreal to me. Like, I almost can't even believe that. I was looking at some of the raw footage of it on Twitter from some of the independent journalists, and it's like totally just devastating. I think there's over like 7,000 people who unfortunately died from this earthquake. It's just, I can't even wrap my head around it. It's so horrible. Yeah, it's just insane to think about just the mass loss of humanity there. And man, it's just crazy to think about. I don't know how to explain it. But yeah, I was watching some of that stuff on Twitter. Silkmore, what's up? Good to see you. Wow, Zozo Bob says the death toll is now 12,000. Dude, that's horrible, man. That's just completely heartbreaking. Wow. Roz999 says, would you believe we had a 3.8 earthquake in Buffalo, New York for 10 seconds? I heard about that too. I mean, talk about craziness. Now, was there any damage there for all of the folks, or maybe any of the listeners that are in Buffalo, New York? Any damage? Now, I'm not an expert in earthquakes, but 3.8 on the Richter scale is pretty high now. All right, let's try to make the light. We got about 6 seconds. So, I'm seeing some comments about that jobs number. We talked about it yesterday, but I think it's appropriate to cover it really quick again. Now, when I mean the jobs numbers, I'm talking about the non-farm payrolls. Here we are at Columbus Circle. This is the main statue here. This is the main entrance to Central Park, by the way. So for those of you who may be new to Walks on Wall Street, Central Park is the largest park in Manhattan. It runs all the way from 59th Street, Columbus Circle, all the way to 110th Street, Cathedral Parkway. And check out that, it appears to be a full moon now, or maybe at least 75% of the way full. But this is one of the main entrances of the park, and it is surrounded by, I'll sort of point out the buildings to you guys. This is the Trump International Hotel and Tower that we're looking at right here. If we pan over some more, this is a building I spend a lot of time in. This is the newly named Deutsche Bank Towers. Deutsche Bank is a major German investment bank, a bulge bracket bank that trades under the ticker symbol DB. We'll talk about maybe some of the toxic derivative exposure that bank has at a later time. But also in this building on the right side, you have a very, very famous hotel. It is the Mandarin Oriental Hotel. And just imagine the gorgeous views of Central Park you have from here. And right next to the Trump International Hotel and Tower, you have one of the most exclusive addresses in New York, 15 Central Park West. If you do some research on 15 Central Park West, you'll find that there's some very, very notable figures who have lived in the building, and B, continue to live in the building right now. I think former CEO of Wall Street Megabank, Goldman Sachs, ticker symbol GS, Lloyd Blankfein. I think he has a unit in that particular building. And for all of those baseball fans, Alex Rodriguez and Derek Jeter used to have units in that building as well. It's an amazing, amazing place. Very high security, very tight security there as well. Let me try to read some of the comments. I know, Lay TR says there was a rat below the bench. Tons of rats here, I will say that. However, in the winter, you don't see as many rats. In the summer around this particular area, you see a lot of rats because this is a big tourist spot. So for those of you who are familiar with our live streams during the summer, especially during the day, what you'll see is a lot of, I guess, street vendors. Like you could see one that's right there, but a lot of the bicycle guys that are standing here trying to rent bicycles to the tourists. Tourists come here, they eat. There's a lot of garbage left around, so hence there are a lot of rats. But beautiful place nonetheless. Beautiful place nonetheless. Michael Joseph, good to see you. Hope you're well. So the non-farm payroll report came out last week or 2 weeks ago now. And it was a major beat. I mean, a massive number. Over 500,000 jobs were created, and the unemployment rate actually fell. So the unemployment rate is now below 3.5%. That is some of the lowest readings that we've had since the 1970s. But it's almost like a little bit of a catch-22, and we'll sort of talk about that as we explore monetary policy today. Because we did hear from Federal Reserve Chairman Jerome Powell as he was being interviewed, and we also heard from a lot of the Fed presidents as well, such as Neel Kashkari. Now, the term disinflation was probably used over a dozen times, and the markets were getting all giddy about that. But I think we should sort of remove our emotions from just that one specific word and really understand what not only Fed Chairman Jerome Powell is saying, but also Fed presidents like Neel Kashkari and the like. And if you've noticed, consensus, by and large, is that they are determined to get inflation back down to 2%. Not 2.5%, but back down to 2%. And if you listen to Neel Kashkari on CNBC, I think it was yesterday and today, one of the things that he said is, look, markets and market participants, both on Wall Street and on Main Street, are sort of, I don't want to say predicting, but expecting, right? They're expecting that once inflation gets back down to 2%, boom, we go right back into quantitative easing, interest rates go to zero again, start the money printer up, right? And one of my predictions is that's not going to happen. And I think Neel Kashkari really enforced that is going to be the case. If you remember correctly, he actually came out and said, we may leave interest rates at 5%, talking about the Fed funds rate. We may leave the Fed funds at 5% for 3 or 4 years, right? Think about the disinflation that's going to happen if the Federal Reserve raises to 5. It's pretty much at 5 right now. After the last 25 basis point rate hike, the Fed funds target rate is 4.5% to 4.75%. So let's say we go to 5 and we stay there for 4 years. I think you're going to see a lot more layoffs, and I think you're going to see a pretty nice correction here in the housing market. I don't know. What do you guys think? This, my friends, is 15 Central Park West. And look at how beautiful the entrance is here. Now, oftentimes when we walk by this building, it's so late at night, and it's actually a little bit later on in the stream, that the gates are actually closed. So it's kind of nice to be able to see in here. And one of the cool things about 15 Central Park West is the exclusivity, if you will. So if you're a high-profile celebrity, if you're a big Wall Street banker, and you don't want to ever see the press, well, you just drive right in here, the gates close, and you don't even have to literally walk outside your apartment in order to catch a cab or get your driver. So pretty beautiful building, quite unique, and arguably one of the greatest locations in the entire city. You have the beautiful Central Park right at your doorstep, if I might add. Hey, Ryan Beck says it's going to take a nuke to the job market to force people out of their homes, whether through defaulting or relocating. It's a good point. That's a good point. Now, speaking of defaults, hold on, let me just make a move around these people because I think this is important to talk about. Now, I got a notification. It was either this morning or yesterday. I forget. I'll have to go back and look. But we are starting to see defaults creep up in the auto market. Has anybody else seen that? Now, I know we usually have a chatter here that actually owns a dealership, and he sometimes provides some interesting commentary in the chat. But we're starting to see consumers default on their auto loans. It's creeping up a little bit, and credit card debt has now reached an all-time record high again. But here's what I would look for, right? And we actually didn't see this in this earnings season. And I'll sort of explain what I mean here. Earnings season, we're in the thick of earnings season right now, okay? But every earnings season starts off the same, with all of the major financial institutions reporting. So if you want to talk about, can we use some of this data as a proxy for the health of the overall economy? The answer would be yes, and here's what I mean. You look at all the financial institutions. Take a look at Bank of America specifically, Citigroup, a lot of the credit card issuers, American Express, Discover Financial, and the like. We're not really seeing delinquencies tick up as it relates to credit card payments, or people defaulting or being delinquent on their credit card payments. And a really good exercise that I do every earnings season, and I think you guys should do the same, is just go to Bank of America's investor relations page and download their deck, right? Download their quarterly financial reporting, and it's usually on the 4th or 5th slide. It'll actually show you short-term default rates or delinquency rates and long-term delinquency rates, which is usually about 90 days plus. We're just guys starting to see delinquencies on credit cards tick up here, but maybe this is how it happens, right? We first see balances balloon, and then we see delinquencies start to kick up. But as of right now, we're not seeing it. We're just not seeing it. Bree Graham says, I want to know how many businesses are getting loans right now. You could also see that on the investor relations page of a lot of these banks. Within reason, I would say. Ryan Beck says, yes, I saw that. So many upside down in the span of 3 months. Well, Ryan Beck, to your point, the Institute, well, if we look at the CPI report, let's talk about that first. We haven't been streaming on and off, so there's like so much to catch up on and talk about. So sorry if I'm bouncing all over the place, but in last month's CPI report, one of the only areas that we're really seeing improvement on is new car prices and used car prices starting to come down a little bit. I think it ticked up slightly last month, but it's come down quite significantly. And I think that's because interest rates have been going up, right? I mean, think about if you walk into a car dealership and you want to finance a car, well, it's going to cost you double than it did this time last year, right? I don't know, anybody in the chat here just recently purchased a car? Can provide any insight on that? I know inventories are building. Richard Vogel, what's up? Good to see you. Hey, Sabrina Fair, long time no see. Trust you're well. Thank you for joining Walks on Wall Street. Isaac C. This is me, very nice. Vinny Castellano, our good friend from Staten Island. Welcome. This is the Empire Hotel. I'll show you guys real quick. It's a very famous restaurant to the right there. PJ Clark's not a big fan, but there's a lot of people that are big fans of it. My good friend ACL, Austin City Limits. What's up, Austin? Good to see you. Welcome back to New York City. Good to have you here. Rat Thanks says, Tom, I recently had a dealer contact me to see if I was interested in selling my 2021 Honda CR-V. Well, what happened? What was the quote? I mean, you don't have to disclose that if you don't want to, but guys, think about. Okay, I think we should be good now, right? I think we're back. Yeah, so usually, well, actually not usually. There seems to be a dead zone right there outside of PJ Clark's. Interesting. But anyway, as I was saying, because Ratfink was saying that his dealer reached out to him. You know, in the pandemic, people were able to sell their used vehicles for higher than what they paid for it new, which was absolutely wild. And that's exactly the type of behavior you have during a mania. All right, I think we may have to head out of Lincoln Center tonight, since it is buffering like crazy. All right, let's try it again here. Let's see. Now that's so strange. Now, yesterday in the city, we were getting crazy buffering as well. I thought today would be a little bit better, but maybe it's actually YouTube. Now, if you guys remember at the beginning of the live stream, we were talking about how Twitter is also down today. So Twitter is down, LinkedIn is down, Instagram was down for a little bit. So a lot of these tech companies are experiencing outages. So maybe it's YouTube and not the connection. Who knows? We'll see. PR says CarMax is in trouble. I think so too. Two Explorers Videos, what's up? John Abraham says global issues since yesterday. Rat thinks says last year the dealership offered me what I paid for my CRV. This time the offer was $5,000 less. Well, I mean, if you own it free and clear, you may want to consider selling it then. Assuming that you could get something a little bit cheaper that'll just get you from A to B. I mean, if you just flip it, it's not too bad. Justin Hernandez is here, says happy Wednesday. What's up? Travelnista says, can you predict how long the recession might be? Well, it's interesting, and I'll say this. There's been so much talk about a recession, and especially as of late, you know, you turn on CNBC, you look at all these articles in Bloomberg, the Wall Street Journal, and every day it's, you know, a massive big Goldman Sachs bigwig is forecasting that the S&P 500 is going to drop 30%. Michael Burry comes out on Twitter, says sell. Other people like Tom Lee come out on CNBC and say, look, it's going to be a face-ripping rally. So I posted this on Twitter, and I'd like to say it here. And this is something that has really helped me investing my own money. And don't put too much credence on what anybody says, including what I say, right? Because at the end of the day, and this is what my friend would always tell me, he's like, Tom, at the end of the day, nobody really knows anything. We're all just trying to make our best guesses, right? I mean, here's a prime example. This is ABC 7, by the way, on the Upper West Side. But I'll give you guys a prime example. Look at last non-farm payrolls, right? It smashed economists' expectations, I think, by 250,000 jobs. You know, we came in at, I think, over 500,000 jobs in the non-farm payroll report, blowing away economists' expectations. And these people are working at mega banks, working at major financial institutions, probably making 300, 400 grand, right? And the point is, they really don't know much more than me and you. So it's not to say don't pay attention to these people. It's just follow your fundamental process, right? And we always stress this on Walks in Wall Street. It's, look, follow a systematic approach to investing, okay? I think where a lot of people go wrong and lose money in the market is they're constantly looking at what other people are saying and what other people are doing, right? Ray Dalio could be bullish on something on Tuesday and then bearish and has his fund net short on Friday, right? Markets are very dynamic, and we need to... we'll try to head back into Midtown. But yeah, one of my favorite Stanley Drucke on Friday. E. Smith says, agree with you, Tom. Most analysts are only right half the time, even Jim Cramer. Yeah, I agree. And it's really not about tonight, guys. Okay, let's try to get back. Okay, maybe we're good now. Dr. Longus says, I think Jim Cramer is wrong most of the time, but can't stop watching him because he's so entertaining. Yeah, I mean, definitely, they even have that, inverse Cramer ETF. Wow, this is a really good shot at Billionaires Row right here. You have 220 Central Park South, Central Park Tower, 157, the Steinway Building, and 432 Park Avenue. Really nice. But in Ray Dalio's book, Principles, he sort of talks about that concept, right? That it's not about being right all the time. It's just about managing your risk. I think the best investors on the planet are only right about 40% of the time. It's just letting your winners ride and then quickly cutting your losses on trades that don't go your way. Michael Joseph says, I was in the ARK Inverse SARK Short ARK ETF. Interesting. For most of 2022. Yeah, a lot of those high beta growth stocks got killed last year. But a lot of the sort of frothy high beta stocks are actually bouncing now. Hey, Outer Haven is here. What's up? Good to see you. Thank you for joining. Trust you're well. So before I forget, and before we start buffering again, I wanted to give you guys an interesting article that I was reading today. So if you type !Klarman in the chat, it's going to drop a link to a Financial Times article that I think you guys will enjoy and appreciate, because we always talk about a gentleman by the name of Seth Klarman. So Seth Klarman is now the lead portfolio manager at Baupost Capital. And he is, or I should say the strategy that he runs is more of a value investing core to like a Warren Buffett style of investing. And he came out in his investor letter, or his annual investor letter, and I think the annual performance of his fund last year was about -7%, which is actually pretty good if you think about it, because the S&P 500 was down double digits. So if you're only down single digits when the benchmark is down double, it's actually a pretty good performance. And what Seth Klarman was saying is that much of this carnage in 2022 that we saw in the market has been sort of a hangover effect of I don't know, almost a decade, probably more, of extreme quantitative easing since the great financial crisis. And I was reading the article and I'm like, he is so spot on. And we've been talking about this almost every night. We covered a little bit on the stream almost every single night. And it's a good sort of refresher to understand how market mechanics and markets work, because you had all of these, I would say, unprofitable businesses able to raise a ton of money, able to grow their top line revenues at all costs, raise money, go public, and trade at ridiculous valuation metrics of price to sales. If they had earnings, ridiculous valuations of price to earnings. And that's all because of an excess of liquidity, right? If you have an extremely, extremely accommodative Federal Reserve, I would say the wind in your sails, so to speak, you're going to have a lot of these names go under a huge multiple expansion. So you're going to have multiples expand across the board, have one of the most overvalued stock markets ever. And then once you sort of take that punch bowl away, like we have been doing throughout 2022 and 2023 with raising interest rates, letting the balance sheet run off, you're going to get huge valuation and PE compression. And a lot of these stocks have been getting smashed, right? And Seth Klarman really lays it out in that article as well. But I would say what would be a little bit better is if you just read his investor letter. I think it's really good information there. So once again, exclamation point Klarman. Klarman with a K, by the way, guys. I'm seeing a lot of people put it in the chat. Exclamation point Klarman with the C. It is exclamation point Klarman. And the whole article talks about pretty much everything we've been discussing here on the streams, about easy money, about how the Federal Reserve works to sort of pull the levers, if you will, of the economy and the stock market. So very, very good read. And I think you guys will enjoy that. Hey, Joan K is here. What's up? Welcome, Joan. Hope you're well. Thank you for joining us on this very buffer night. Have a lot of buffering going on. The internet is not too good. But I think as we head back down into Midtown, things should improve a little bit, hopefully. We'll see. Gregory is here. Welcome. Thanks for joining us. Little Larry Sellers. It's a beautiful night in New York. Yeah, I think it's 44 degrees out. It actually feels a lot warmer than 44 degrees. We are now standing right outside of the Trump International Hotel and Tower. Check out that amazing view of Billionaires Row. It is an unreal view. And that is 220 Central Park South, where Ken Griffin Citadel Securities has a place. Hey, the LT Prod, what's up? I see Abdullah, welcome. Thanks for joining us, Abdullah. Now, let's talk about the bond market. Look at that 10-year U.S. Treasury yield, guys. So take a look at tradingview.com or wherever you use your charting software. I don't know what you guys use. If you're running a Bloomberg terminal, look at it on Bloomberg, MarketSmith, TradingView, whatever. Take a look at that 10-year U.S. Treasury yield today, 3.613%. We actually went up a little bit today. So if you put a 50-day moving average on that 10-year U.S. Treasury yield, we actually broke back above the 50. And like clockwork, we have some pressure on the equity market. So generally speaking, but not all the time, it's not an exact science, but usually this is sort of what I watch for, especially in this environment. Usually when we have some sort of a sell-off, it's a beautiful dog there, by the way, in the debt market. So as bonds are selling off and yields are rising, we usually have money flowing out of the stock market into the dollar. So if you look at the Dixie today, the Dixie actually continues to catch a little bit of a bid after getting smashed throughout the fourth quarter of 2022. 2022, going into 2023 as well. But here's the concern, is that if the dollar wrecking ball could come back and sort of show its head here, and we could have a monster rally in the dollar, if we could have rates rising, if we can get that 10-year U.S. Treasury back to 4%, that's going to be some significant selling in the debt market. And I think that could be a magic elixir, a perfect scenario for this market to correct and cool off a little bit. And I think it should do that, because if you think about the rally we've had on Wall Street, which has been a very nice rally, by the way, and I think a very durable rally. If you look at the NASDAQ, we now have 6 follow-through days on the NASDAQ, but a lot of the individual stocks, guys, are very, very highly extended above their 50-day and 200-day moving average. Most notably, a lot of the tech stocks and the home builders too. Home builders actually, almost all of them. You look at KB Home, you look at Toll Brothers. A lot of these stocks have now tested their all-time record highs. And I think all of them are either about 15 to 20% extended to the upside from the 50-day. So I think it would actually be normal to see these particular stocks pull back here and what I like to call handle, right? So we've been building this pretty solid, I would like to call it maybe stage 1 base in a lot of these home builders. We've rallied up that right side. But I think maybe about a 10 to 15% correction, work our way back to the 50, maybe find support and continue higher. I think that would be healthy for the market. We have more than enough follow-through days for a durable uptrend to be in, but I think a lot of stocks are extended now, so not the chase. There was another thing that came out, I think from Goldman Sachs, that said retail trading volumes eclipsed another all-time record high, which is actually, you can use that maybe as a bearish sentiment indicator, perhaps, because one of the main things that we want to see for this market to put in a durable bottom is a lot of the speculators, the speculative excess, so to speak, coming out of the market. So a lot of the retail traders, a lot of the the meme stock people really should be getting blown out of the market. But we're actually seeing record fund flows into these speculative high beta ETFs like the ARK Innovative ETFs and the like. So I find it very difficult to believe, could happen, but I find it very hard to believe that we have a material bottom here and we'll just go right back to all-time record highs until we could see more carnage and sort of a big capitulation shakeout. For a lot of these retail meme stock traders, I think it was according to Goldman Sachs today, retail trading volumes hit all-time record highs on exchanges. Hey, Jessica and Lisa. Says, hey, Tom, great to see you again. Great to see you too, Jessica and Lisa. Thank you for joining us. On this beautiful night in Manhattan, we are walking down Central Park South. Check out that moon. That is a gorgeous moon here, Central Park. Hey, Hawaii, is it safe to say it's not a good idea to invest in Disney right now if they're planning to lay off thousands? Well, actually, I think a lot of people evaluate that analysis the improper way. And we sort of talked about this last night. And it's going to sound a little bit, I guess, maybe coy, but that's probably not the right word. Insensitive, I guess, something like that, to say that, perhaps a lot of these layoffs are actually pretty bullish, so to speak, especially if you think about the tech sector, right? So yes, Disney reported earnings today. They actually beat on both the top and the bottom line. They beat on EPS and they beat on revenue growth, but Bob Iger came out and announced that they're going to lay off about 3% of the workforce, or about 7,000 people. Now, we just got through talking about monetary policy and how we've gone from extreme quantitative easing and accommodative monetary policy to non-accommodative quantitative tightening, interest rates going up, the runoff of the Fed balance sheet. And that creates a lot of problems for companies that have a lot of debt. So companies naturally look to trim the fat, so to speak, reduce headcount when they can. So if you can naturally reduce headcount in your organization, and from there, let's say if you lay off 3 to 5% of the workforce, but with no material impact to productivity, well, that's actually pretty good. It's actually pretty bullish. So, I think this is normal. Obviously, it's horrible to hear about anybody losing their jobs. But if we use Twitter as a model, right? And ironically, Twitter is actually experiencing some major technical difficulties tonight, as well as a lot of these other tech companies, with YouTube as well. One of the things that you'll find is Twitter went from about 10,000 employees, over 10,000 employees, to 500, I think. I'm not sure the exact amount. And Twitter seems to be running okay. So if all of these other companies out there start to see this and say, hey, Elon Musk just cut 70% of his employees, and Twitter is running, I would say as normal as it can be, well, what is that standard going to be set for the rest of the industry? There's probably a lot of additional fat that these organizations can trim. So I guess in conclusion, what I'm trying to say is, this is a nice shot of the JW Marriott house, by the way. What I'm trying to say is, whenever you see a big headline on Wall Street saying, Amazon, Microsoft, Disney laying off, 10,000 employees, whatever it may be, markets will usually rally on that news, because assuming the company can maintain revenue growth, have their operational efficiencies be increased, and have no material impact to customer service, well, layoffs are actually very bullish for a company. May sound crazy, but it is. Oh, I missed the super chat. I apologize. Jessica and Lisa, thank you so much for the $5 donation. Just hope everything is going well for you. We enjoy watching. Well, thank you so much, Jessica and Lisa, for your very, very kind donation. I appreciate it very much. And thank you for watching Walks on Wall Street. We are now looking at the inside of the gorgeous JW Marriott Essex House. Look at these beautiful crown moldings here. Hey, Barber for Life says Uber had great earnings. They did have pretty good earnings too. I think the biggest highlight out of Uber's earnings report for me is that the CEO came on the call and said they are making extreme headway into grabbing market share away from Lyft. And I kind of agree with him, because I never use Lyft anymore. I kind of refuse. I try not to use Uber. I've actually been trying to cut back on using Ubers, but I actually used Uber this week to take an Uber from my place to Fort Lauderdale Airport. So, which wasn't too bad. It was like $30. Usually it's like 50. John says flawed comparison with Twitter. Maybe. Caden says, hey Tom, are there any shows going on in New York City? If so, what are they? Plays or performances? To be honest, I'm not too sure. I'm not a big Broadway guy. I think, maybe photos from around New York in the chat, or any of the other chatters, please put in the comments, what good shows. I'm really not a big Broadway guy. I'm not saying Broadway is not good. I would definitely recommend you go seeing a show. I've just never really had time to go see any. I think the last time I've been involved with a Broadway performance was when I almost got fired from my job for promising a customer I'd get him tickets to Hamilton, and that did not go over too well. Hey, the Austin Tennis says it is truly possible to operate as usual with such significant layoffs. I feel like there are some bottlenecks that aren't seen with the naked eye. I agree. And look, Austin Tennis, we were trying to draw this comparison today, right? YouTube is having major problems today. LinkedIn, that is owned by Microsoft, is having major problems today. Twitter is having major problems today. A tech company that laid off a bunch of people. So every single tech company, pretty much, that went through massive layoffs are having serious outages today. Now, you could say that's a coincidence, and maybe it is, but maybe it's not. You know, I've worked at major tech and telecom companies where the moment we went through rounds of layoffs, it created a lot of inconfusion between teams. Because unfortunately, you know, getting laid off, it sucks. Not going to try to sugarcoat that, it does. We are on 6th Avenue now, guys. If you look all the way downtown, you'll see the One World Trade Center. But a lot of the times when people get laid off, the handoff, let's say if you were on a team, you were working on a specific project, and your team gets terminated. Well, who's working on that project? Well, nobody. It gets thrown into a loop of fog, and nobody really knows about it. So I would even say, you know, talking about cybersecurity and cyber attacks, I think there's a lot of nefarious actors all over the world that are probably working as hard as ever to try to capitalize on a lot of this inconfusion that is going on at a lot of these tech companies. But the Austin Tennis, I think you're at a big tech company, right? You are at PagerDuty. I think PagerDuty announced some layoffs too. Hopefully you were not impacted by that. I think you told us that you weren't, so thank God. Photos from around New York says Hamilton is actually an amazing story, and it mixes US and New York City history in as well. I agree, Photos. I remember when it first came out in New York, and at the time the tickets were very expensive. You know, some of the tickets were going for thousands of dollars. And I had no idea. I was completely oblivious to it. Patrick New York is here. What's up, Patrick? Good to see you as always. I see my friend Prince Ice, GGNYC. Good to see you. Love is Kind says, Tom, I know your thoughts on AI are meh. You'll be all right, but AI audiobooks, AI art, and AI writing is greatly affecting the artist community. Artists are about to become obsolete thanks to AI. Now, I think you have a point, right? I think you have a point. Here's what I was thinking about as it relates to a particular job that may be obsolete due to AI. A lot of the voiceover work. Has anybody been seeing a lot of these deep fakes come out? It's almost a little bit scary. I mean, now it's gotten to the point where it's pretty obvious to tell if something is a deep fake or not. But I think in 10 years, scratch that, 5 years, you won't be able to tell at all. Seriously, you won't be able to tell at all what is a deep fake or not. So to your point, think about all of these creatives, I should say, right? Artists, whatever you want to call them, that are doing a lot of the voiceover work for movies, cartoons, whatever. Think about the profits that a lot of these mega tech companies could potentially generate if they could just spin up an AI voiceover and create shows in perpetuity where the AI will actually write the script and the plot themselves, and you'll be able to generate any voice you want, right? And then obviously you don't have to pay the AI. Robots work for free. So it's a good point. I think there's going to be a lot of crazy things coming out. But look, I believe in the law of slow-moving disasters, if anybody's heard of that. And the law of slow-moving disasters pretty much says that humans have always been very, very good at adapting to things. So if we see this disaster on the horizon, if you want to talk about climate change or whatever, right? We're probably going to solve for it. We're probably going to adapt to it. So I'm pretty confident that it shouldn't be too bad. Too bad. Wow, check out this. This is an awesome shot here. Twitch ASMR's Disney value will decrease in the long run as they have not maintained the magic. People are disappointed. Well, maybe, perhaps, but I mean, they did beat on both the top and the bottom line, and revenues are up. So, interesting to see. Robert Parker is here. Zoom technology is having problems after the pandemic. Well, I think Zoom is just in a very, very crowded market, to be honest. The Austin Tennis says, I agree. I can speak for many company and say there are a lot of abandoned projects. Yes, I've been a part of teams that projects were abandoned as well. Two Explores videos, as I saw a student concert from Juilliard 2 nights ago. I used to It used both New York City and interesting. Wow, that's awesome. Caden says, hey Tom, have you ever gone to the 9/11 Memorial Museum? I've never been to the museum, but of course I've been down to the 9/11 Ground Zero for sure, many times. Absolutely. Now here we are outside of the Plaza Residences. So this is the Plaza Hotel, but this is the entrance to, if you have an apartment or something like that, the residences. And then on the other side is where you have the hotel. Really beautiful architecture here. Hey, Robert is here. What's up? Kumar, welcome. Susanna Q4s is with AI Tech. Makes me feel I'm up for an upgrade, yeah. Interesting. The Austin Tennis is asking about Becco. You know, I haven't. I haven't been to Becco in a long time. Whoa, guys, look at this. The Plaza Hotel is getting an upgrade to the scaffolding. This used to be the really low to the ground scaffolding, but look at how high the ceiling of the scaffolding is here now outside of the plaza. It's actually really nice. Look at the gorgeous architecture inside. Hey, Michelle K is here. What's up? Mike sees his beautiful ironwork. I agree. Good to see you, Mike. Here's the main entrance to the Plaza Hotel. Let's see if we can go in. They usually have it open to the public, but it may be closed after the holidays. We'll see. Ooh, I think we can go in. Look at how beautiful it is here. Wow. It smells really good too with all the flowers. Wow. That's incredible, guys. Wow. So the hotel lobby is through there. It's for guests only. You know, they may have this like this for Valentine's Day, I think. So I think this is closed now, but look at, this is where they have the bar and the restaurant. Wow. That's really beautiful, isn't it? Hey. Oh, no filming? Okay, thanks, man. No filming. I think maybe they only allowed the filming during the holidays. But it's awesome there, isn't it? I think they did a really nice job. Even with all the holiday decorations down, it still looks gorgeous in there. All right, let us press on to the east side. Maybe we'll hit Park Avenue. Hey, Texas is here. What's up? So somebody is asking about the company Box and if I'm familiar with it. Yeah, so Box is actually Aaron Levy's company. So CEO Aaron Levy. And here's the interesting thing about Box. So the ticker symbol for that is ticker symbol BOX, obviously. That was probably one of the most overhyped companies ever. If anybody remembers billionaire investor Chamath Palihapitiya, who is very famous for making a ton of money with Facebook when they went public. He is also the CEO and founder of Social Capital, who played a very big part in a lot of the SPACs or the special purpose acquisition companies, which you guys know I'm not a big fan of any of those SPACs, but that's a topic for a different night. So Box was actually, I think this was back in 2014, 2015, in one of the first or second years the company was public. And Chamath had that particular company, that particular stock, as his top pick for that particular year. But the stock has pretty much traded sideways, and it's been dead money for well over 7 years now. I think there was a major investment from a major hedge fund. They have a big enough equity stake that they have a board seat, and they're trying to really help and assist the company. And finally, they're just starting to see profitability on the EPS side, and they're starting to grow their revenues or increase their revenue growth. And the stock is actually trading at a 52-week high, and it just broke out near all-time record highs. Now, I will say this. Here's my experience with Box. I actually interviewed at that company. I was going to be an account executive, mid-market to enterprise account executive at Box. And it was a very weird experience, the interview. They're a very, I would say, and I'm not trying to be a jerk when I say this, it's a very airy, free-flowing Silicon Valley tech company. It's like very, you know what I mean? They're not like very aggressive salespeople. That is what I've found. And I think that's probably the main reason why their revenue growth isn't as robust as it could be. I think if they did a complete rip and replace of the sales team, the sales force at Box, I think they could really, really get the gears turning there, for lack of a better word. Now, if you think about a company like ServiceNow, Bill McDermott's company, ticker symbol NOW, I think if you had the aggressiveness as you have some of the salespeople at ServiceNow, some of the account executives there, I think you could see 20% revenue growth quarter over quarter at Box easily. And the reason why I say that is I tend to have a very good gauge on salespeople. You know, I've been in tech sales for my entire career up until a couple months ago. And when I interviewed with the hiring manager, the recruiting team, and one of the account executives, it was just total complacency, and it just didn't seem like anybody wanted to sell anything. And it was quite weird in a way. And I don't say that to, look, everybody runs their company differently, but I think that's why you've had lackluster revenue growth there. It's quite the stark contrast from companies like, a ServiceNow or a Salesforce, very aggressive, go-getter salespeople. But Aaron Levy, right? And I like Aaron Levy. I think he's a good CEO. But he wanted to take another route and didn't want to get aggressive with the sales force. And I think that is changing now. But maybe if anybody works at Box could, give us your insight. We would love to hear it. We are now on the corner of 5th Avenue and 57th Street outside of the Bergdorf Goodman. Very quiet night in the city. Little Larry Sellers is hearing those numbers. Box might just be calling you back for some new talks. Yeah, I mean, look, and again, I have no bad blood with anybody. Sometimes you're just not a good fit for the company, but yeah. Look, the stock has been dead money for 7 years, but I am paying attention to it. Box is on my watch list. They've reported some pretty decent quarters, but I think they just need a little bit more robust revenue growth. I think they need some very, very big wins in the enterprise space. in my opinion. Hey, Teresa Diaz, good to see you. Thank you for joining us tonight. We are now outside of the Trump Tower. Hey, Alan M., good to see you. So we'll cross 5th Avenue here, and then we will head down towards Rockefeller Center. Richard Vogel. Well, I think now that in New York, so there's a lot of comments about, marijuana being legalized. I think we now have a dispensary in New York City, right? Look, I think I do support the legalization of marijuana, but I think it should be regulated just like anything else. Like, with cigarettes, you can't smoke cigarettes on a plane, you can't smoke cigarettes on the subway or inside a restaurant, something like that. I think it should be the same thing with marijuana. I think it would be best if it was sort of enforced that way, in my opinion. But in New York, it's pretty much fair game anything. I was taking the subway last night. I had to make my train really quick, and there was this group of kids smoking out the entire subway car, just like fumes of marijuana in the subway, which I'm not a big fan of that. I think it's a little bit disturbing. Susanna Q Force has agreed. Yeah, I mean, I think my opinion resides in this. If we could tax the sale of marijuana in New York, then maybe we could revise the tax plan as it relates to the income tax. Now, that's assuming it generates a ridiculous amount of revenue, but if we have first mover advantage in New York, where you can actually come here and buy it legally, think about all the tax dollars that's going to generate for the state. And if the state does the right thing, what we could do is use some of the windfall profits that we're making from taxing marijuana sales, and then revisit the tax plan, and then maybe give us a little bit of a break on the state income tax. That's sort of my idea. And both Democrats and Republicans in the state have actually proposed that as well. And I think that's fair. B. Smith says, I smelled marijuana all over when I walked in New York City a few weeks ago. Yeah, I personally don't smoke it myself, but at the end of the day, I think this is where the major problem lies, is that, we have a major problem in this country with the fentanyl. And it's come to the point, oh, look at this. This is the Mandarin Oriental Residences it's going to be. I had no idea. Wow, Mandarin Oriental Residences, 5th Avenue. That's insanity. That's going to be really cool to see that. We just passed the Mandarin Oriental Hotel at the Deutsche Bank Towers. So anyway, the problem is a lot of people are just trying to, buy marijuana off the street from dealers. And in some instances, not a lot, but some, it's being laced with fentanyl, which is horrible. So the theory there is, look, people are going to be purchasing marijuana anyway. Like, you're not going to stop it. It's just not even a conversation. We shouldn't even talk about it because it's just not going to happen. So what we should do is we should be responsible and have the government regulate the industry, where people could open up businesses, make profits from the sale of marijuana, And you have a regulatory agency, just like you have the Food and Drug Administration, where they regulate and make sure things are up to code and up to standard. If we do that here, we pretty much cut out all of the scumbags in the cartels. We cut out all the dealers that are trying to take advantage of people. And if you want to buy marijuana, it's going to be safe. It's not going to be laced with anything. That's sort of my thought process. Now we are looking at the beautiful St. Thomas Church as we walk down Fifth Avenue. This is a gorgeous, gorgeous church here, one of my favorites. Ryan Royals is exactly regulated, tax it, and it will be much safer. I agree. And look, I don't smoke. I would never use it, but it's not the United States of Tom, right? It's the United States of America. People are free to do what they want. And if people are going to do what they want, I want citizens to do it safely, right? Dordon Miller says, "Hey Tom, hope your week has been great. Always continue to inform and inspire us along with your weekly walk and talk sessions." Thank you so much. I appreciate you watching. And thank you for saying that. It means a lot. You know what, I'll turn down here so I could show you guys Jefferies, major financial institution. Now, team, it seems as if the internet is not bad in Midtown, right? I think there's just a big dead zone over the Upper West Side right now. It seems like anything above 60th Street is a major, major buffer zone. I don't even think people have cellular service right now above 60th Street. Dr. Longus says, "I don't smoke it, but if you're going to legalize it, make it like alcohol where it's not around kids or in public or driving." 100%. I agree with that 1,000%. And a lot of people, because you guys know, I tend to be, more libertarian, conservative in nature, but government does play an important role in society, especially around things like this, right? You want government to handle, like water supply. You want to make sure the water is clean and, there's no nefarious activity there. So you need these government entities. And I think the biggest failure in U.S. history, in my opinion, may be a little bit of a hot take here, but the biggest failure in the United States history has been this war on drugs. Billions and billions of dollars and lives lost. When, if we could just face it and say, look, people are going to smoke weed. People are going to do drugs, okay? You're not going to stop it. You're not. So why don't you regulate it? In which case, it'll generate tax dollars, and you can give Americans a tax break on their income tax. And when people buy marijuana, or, you name the drug, it's going to be safe. It's not going to be laced with anything. And then you totally defund all of these cartels, right? There's a reason why the cartels are multi-billionaires and potentially trillionaires. It's because of the war on drugs, right? So anyway, here is Jefferies right here on Madison Avenue, East 53rd Street. This is actually one of my favorite buildings in the city. I think it's very, very unique. Hey, Alan M., what's up? Good to see you. Thank you, Alan M. Appreciate it. Dusty Cole, God bless you. Thank you for joining us. Yeah, Valerie Rogers, you were correct. You were 100% on that. Terry's is just like war. Tom, drugs make money. War on drugs make all the money. Yeah, unfortunately, we were just talking about, and I think it impacts markets too, right? I mean, look at all the defense stocks, right? You look at, Lockheed Martin, look at Boeing and, Raytheon. These stocks are doing really well, and it's because of all these, every day billions and billions of dollars going to this bomb, that bomb, fund this war, that war around the country. Around the world, excuse me. But, it's crazy because you guys know I commute home every day on the Long Island Railroad out of Penn Station. And after 10 p.m., okay, if anybody goes to Penn Station after 10 p.m., it's almost embarrassing as a country to see what goes on there. It's homeless people everywhere, and these people have severe mental disabilities, and I really do feel bad for them. And us as a country and as a city, we let these people to the street, right? So it seems as if we never have any money to take care of, our own homeless people here. But, let's print up another 2-3 billion to, send, tanks to fight, meaningless wars. It's crazy. It's horrible. It just doesn't make any sense to me. And I'm not an expert in foreign policy or anything like that, but it almost takes a mental toll on you every day at night, going to Penn Station, especially in the winter. These people have nowhere else to sleep, so they're all crowding in Penn Station, and it's a horrible sight to see, man. Really, really is. Oh, Terry says it's the same thing in my area that I live in, Philly. That's horrible, man. I didn't know that. I didn't know Philly had a big homeless problem. Now, the last time I was in Philly, well, I didn't really spend too much time there. Last year, I think it was actually this time last year, I took the train from Penn Station to Philadelphia, but my work outing that I had to go to was in a place called King of Prussia, which was actually more like suburbia, if I remember it correctly. I don't really remember it being that big of a city, but it was actually pretty nice. From what I remember, King of Prussia was actually really nice. I'm not sure if you're familiar with that area, but it was really nice. Here we have the Seagram building. This is my favorite building in the entire New York City. Hey, Travelnista, good to see you. Okay, Gregory says, yeah, Kensington is rough. There are videos made about it. Lilith says, Phoenix and Tucson have bad homeless problems as well. Harry Connor says, homeless is now illegal in many states. Renee says, Tom, I totally agree with you about the homeless situation here. Yeah, and it's sad because here's the thing. For anybody who's not from New York, and I don't want to make a big generalization about this, and it's actually important to talk about because it's going to impact the federal budget. It's going to impact a lot of things. It's not as easy as everybody says to say, oh, look at all the jobs available. Why don't these homeless people just go and apply for one of these jobs? When I hear some of that stuff on Twitter, I automatically just assume that these people have never been to New York City, because for anybody who's a New Yorker, like myself, who lives and works in the city, the vast majority, I'm not going to say everybody, right? I don't want to generalize, but the vast majority of people who are homeless in this city, they're suffering from like mental conditions, right? That they're not getting any treatment from. And it's quite obvious to see, right? These people are suffering from some sort of a mental condition, that they're not getting the appropriate treatment, they're not getting the appropriate medication that they need, which then in turn prevents them from ever being able to hold a full-time job. Does that sort of make sense? Look, and this is just from my experience, it's pretty obvious, it's pretty evident. I'm in Penn Station, there's people just screaming like incoherently, and we're the richest nation on earth. We should be able to provide, medical care for these people or housing for these people. And look, I don't really know the solution for it, but it's just so bizarre that we have all of this money to send and funnel for bombs and weapons, and all of these defense stocks are raking in record profits, but we can't, I don't know the answer. It's wild. I don't really want to go off on a tangent, but it's crazy. And that impacts economic activity too, if you think about it. The homeless situation compounds and compounds on itself. And if we have a mental health crisis in the United States and people don't have the necessary insurance that they need to pay for their doctor's visits or their medications, well, that's just more people that are going to be coming out of the workforce. And as we saw in the latest non-farm payrolls report, well, the labor force participation rate is still below where it was before COVID. It's like 62% labor force participation rate, which is very, very concerning.
Yo, maybe you don't believe me, bro.
Hey, Lou T. Williams, good to see you. This is Tom. Our homeless situation began in the early 1980s. Scotty says Adams has tried to do something recently, and it's still a joke. Yeah, I mean, it's tough though, man. Like, I understand we have a big problem now, especially in New York, with a lot of the immigrants have no place to stay, and it's a mess. You're right, but here's the thing. I do, and I'm not, and you guys know where I stand politically. I'm not a big Mayor Eric Adams fan, but I do see him trying, and it's a lot tougher than it seems, is what I've learned as I've gotten older. It's hard, right? It's easy to, cast stones at this mayor, that mayor, but it's tough. It's a big problem. It's a big city, and it's a big problem. Yo, Steve CR, good to see you, my friend. Welcome. CeeLo is here. Yeah, so Sabrina Ferris says barely nope, UBI is not the answer. I actually agree with that, and here's my take on that. Because it's obviously, and I saw this tweet today by Ross Gerber. He's actually a really, really famous investor. He's a good investor. Really good friends with Ron Barron from the Barron Funds. Ron Barron was actually one of the first people to be very bullish on Tesla. I think he made multiple billions of dollars being long Tesla. Anyway, so Ross Gerber tweeted this today on Twitter. And I think I retweeted it if you want to follow us on Walks Wall Street. He said, California is a prime example of why solving the homeless issue is not a money problem. And it makes a lot of sense. California has a larger GDP than many countries around the world. I mean, just think about that, guys. California alone has more gross domestic product and economic output than many countries around the world combined. The United States is the richest country on earth, and throwing money at random things isn't going to help. Because I could give, the homeless, whatever department handles that in California, I could give them $3, $4, $5, $6 billion, make it $16 billion. But if there's incompetence within that hierarchy, that capital is going to be allocated in a way that is derelict, right? So I think a lot of policy within government and a lot of people in government in and of themselves are derelict in their duties to fulfill what they promised to do in the first place. So you could give them 20 billion, right? And it still wouldn't matter. I think it's the policy that matters. I mean, the United States is so rich. We have so much money. We literally have unlimited money here, guys. So it's obviously not a situation of money. It's a situation of resourcefulness and policy. And I don't have the answer to that. I don't. Okay, we are now back at our friend, our good friend here. This is the Cause statue. Many of you call it the Pink Elmo, which is kind of funny. Hey, Kerry is here, says his mental illness. They need to force them to get help. Yeah, I mean, we sort of just talked about that. You're right. It's, these people, I think it's just they don't have the money to do it. And I think a lot of the government programs are, again, like I said, a little bit derelict and they don't really work. I don't know. Now, they're almost finished here, guys, with the towers at the Waldorf Astoria. Now, I'm really excited about this building, and I'm also excited about the Waldorf Astoria that is going up in Miami, Florida, which we are actually probably going to see that being built live. What I'm trying to do is create like a little bit of a time lapse. Maybe I'll set up a camera in downtown Miami if I get the permission, and then over the next couple of years, you'll be able to see a cool time lapse of the tower go up. Hey, Richard Vogel, this is Tom. How did you get an invite to the stock exchange? So the company that was ringing the closing bell in Vela was so nice to invite me. They gave me a really nice invitation, and I was able to attend the closing bell ceremony at the New York Stock Exchange on Monday. So I am very thankful and appreciative to the team for the invitation. It was an awesome experience at the New York Stock Exchange. I mean, if you really want to talk about, free markets, American capitalism, American exceptionalism, it all started right there, my friends. The original Buttonwood Agreement was on display at the New York Stock Exchange, and that's free markets. When you walk in there, that is what America is all about. Freedom, free market capitalism, free enterprise, entrepreneurship, and that's what it's all about. So it was just amazing to be in the place, and I had a great time. So I'm very, very thankful for that. I took a lot of photos there of the floor, and I posted it on my Twitter if you guys want to check it out. But I had a great time. I had a really, really great time there. But check out the One Vanderbilt building, all lit up in blue tonight. I wonder why it's lit up in blue. Who knows? Hey, Alan M., what's up? Scotty says, who owns the Waldorf Astoria? I don't know, actually. I have no idea. I think it may be, I don't want to say. I have an idea, but I don't want to say. I don't think it is China. A lot of people are saying, I don't think it is. I actually think it's a Russian investor, right? Hawaii is a Chinese company? Really? I don't know. Oh, Andrew says Hilton owns it. I have no idea. I didn't know that. Somebody says, Tom, is that 270 Park construction to the right? It is. So we'll check out. This is actually going to be Jamie Dimon's new office tower. Check this out. And it's actually coming along great. So this is 270 Park Avenue we're looking at. You could actually see some of the sparks from the welding falling off. But this is going to be an amazing addition to the skyline of Manhattan. This is going to be a beautiful, beautiful office tower. If you look right here, you can see the ironworkers welding. Yeah, Park Avenue is going to look completely different in a couple years. I can't wait till it's done. You can see the guy welding right here. It's kind of cool. Renee, I think you're right. Blue for the fallen police officer. So that's another tragedy that happened here in New York. Now, I don't even know if I want to say because I don't know the entire story. Really quick, that is 432 Park Avenue right here. But I believe, and unfortunately, an off-duty NYPD officer, I think he was shot just when he was going to the bodega I think he was going to get something to eat. And I think he was off-duty. I don't think he was on the job. And I think it was a robbery that unfortunately went wrong. And a couple days later, he unfortunately passed away. It's just a horrible, horrible story. I was looking at it. It was an article, a little article in the Wall Street Journal, and the family just looked totally distraught. It's horrible. But yeah, I think you may be right. I think that's why it may be blue tonight. Now this is the Hemsley building, 230 Park. And right behind it is the one and only Grand Central Station, Grand Central Terminal. R.P. McMurphy says 2 sources said Hilton sold it to a Chinese company in 2014. Wow, I didn't know that. For some reason, I always thought it was a Russian company that owned the Waldorf Astoria. I had no idea it was a Chinese company. Dutchman says the Ambang Insurance Group of China purchased the Astoria in 2014 for $1.95 billion. Wow. Now, do you guys think they got a good deal? What do you think? Joe Driver says, Tom, in Brooklyn, he was buying a used car gone bad. Really? I heard it was a bodega. He was shopping or something. I don't know. I'll give you guys another shot of the construction site here at 270 Park. Once again, Jamie Dimon's brand new office tower. I love walking down Park Avenue. It's an awesome, awesome place. Vinny says that's just that building. Hilton manages the Waldorf Astoria locations. Copy that. All right, let's wait for the light and then go under the causeway here. Wagner Group Brazil, what's up? This is typical city from the movies. Just missing a taxi driver with a Spanish accent. Very funny. Okay, let's cross. That was almost a fender bender. So we'll just do a quick recap of the stream. We had a lot of technical difficulties tonight, so I do apologize for that. There was a huge amount of buffering all throughout the stream tonight, so I do apologize. But I think a lot of the tech companies are having outages. We talked about the Twitter outage, we talked about LinkedIn outage and the like, but I think the biggest piece of news today was Disney. They reported their quarterly earnings report today. They did beat on both the top and the bottom line. EPS, or earnings per share, came in right at 99 cents. The majority of analysts on Wall Street were expecting a 78-cent EPS reporting, so a big beat. I shouldn't say a big beat, a little beat on the top, or the bottom line, I should say. If you want to talk about top line revenue growth, Disney raked in $23.51 billion in revenue, when Wall Street analysts were expecting $23.37 billion. But in terms of profitability, if you just want to talk about net income, so what the company actually earned in the quarter, they earned $1.28 billion this quarter. That is pretty good. And the reason why I'm so impressed with that is because there's every single reason, if you look at the macro environment or the macro picture, to be very negative and very bearish on the economy. So in the previous quarter, when the narrative in the media is, everybody's losing their jobs, the economy is so horrible, then you have a company like Disney that focuses on entertainment, parks and recreation, comes out with a beat on their earnings report and a net income of $1.28 billion. And this is sort of the code that I'm trying to crack, because, speaking of the Waldorf Astoria, speaking of Hilton, speaking of Hyatt, Hyatt Hotels is trading near their all-time record high. And I think it pulled back today, but yesterday it hit a new all-time record high. So we have a lot of these hospitality stocks doing really well. We have Disney, where, people go to Disneyland, Disney World, they pay, sometimes thousands of dollars to take their family on a vacation. All of these type of companies doing well in this environment, it's kind of strange. How long could it last? Is something going to break? A lot of the leading economic indicators, such as the Institute for Supply Management, PMI numbers, continue to fall off a cliff. I would say the number one thing, well, I shouldn't say the number one thing, but one of the main things that I look for in that ISM PMI report, if you go to the Institute for Supply Management's website, I would highly advise all of you to do this. Pull up the last report and look at the new orders category, right? Look at the new orders category, and for the 5th month in a row, new orders continued to decelerate and contract. So again, as you're looking forward into the future, if manufacturing companies are not getting a lot of new orders, well, what does that mean for sales at a lot of companies down the road? It probably means things are going to go lower. So If you look at new orders category, it contracted again to 42.5, the fifth month in a row of contraction. The headline PMI number came in at 47.4. And again, deceleration. Generally speaking, a reading above 50 signals expansion in the manufacturing sector of the economy. A reading below 50 signals contraction. So we have all of the leading economic indicators telling us that things are going to hell, while we have hotel stocks trading at all-time record highs, home building stocks trading at 52-week highs, and Disney reporting a good quarterly earnings report. Crazy world. Crazy, crazy world we live in. Hey, Terry, thank you so much for your very kind $20 donation. It says, hey, Tom, I just found your channel. Very informative. Thank you so much. Hey, Terry, thank you for being here, and thank you for your donation. For those of you who are new here, we do go live about 5 days a week, starting at 8:30 p.m. Eastern Time between New York City and Miami. During the weekdays, we cover the financial markets. On the weekends, we sort of just hang out as a team, walk around, hang out, blow off some steam. So I'd love for you guys to join us again on Walks on Wall Street. Hit the subscribe button if you're new. Thank you for your very kind donation. And now we are standing directly outside of the very famous Grand Central Terminal. Looks beautiful tonight. Check that out. That is a beautiful view of the Chrysler Building. Talking about Art Deco style architecture. I think that's the best you're going to get in the world right here in New York City. Wow, Valerie, is that right? American football is growing in the UK? Speaking of American football, I think the Super Bowl is this Sunday, right? Now, I think that'll be fun. I'm not a big football guy, as you guys know, but I do watch the Super Bowl. I think it's fun. Who do we think's going to win the Super Bowl? Let's put it in the chat. Now, I only know that the Eagles are playing. I don't even know who the other team is. So based upon that data that I have, I'm going to say I want the Eagles to win. What about you guys? Tom Conway says, hey, Tom, how many miles do you walk a night? Usually right around 8 miles. In the summer, it could be a little bit more than that. Matthew M says, go Chiefs. Patrick Mahomes, MVP. Copy that. I'm seeing a lot of Eagles. Victor says Eagles. Austin City Limits says Eagles. Wow. Tariq Khan says KC all day. Hey, Tariq, what's up, man? Good to see you. Thanks for joining. Let's head back into Midtown now and head up. Now, maybe we're too skewed. Hey, good to see you.
Good, baby.
Good to see you. Now, maybe we're too skewed towards Philadelphia because we're pretty close to Philly. We have a lot of viewers from Philly, but we'll see. Karina Thompson for the Chiefs. All right. We'll see. Hawaii says Chiefs says the Steelers fan. Very nice. Bonzo Law says KC is more talented. Well, here's the thing. As you know, I very, very seldom pay attention to football. But there is this one guy, I think he plays for the Bengals. He's this young kid. And I always root for him. I forget his name, but I mean, I think he's one of the most famous quarterbacks ever. I forget his name. Plays for the Bengals. Anytime he's playing, I'll, root for him, I guess. Dr. Longas says, I don't care either way, but Philly is going to mop the floor with the Chiefs. We'll see. You're right. Joe Burrow. That's it. Joe Burrow. Yes. Anytime he's playing, I'll if he was in the Super Bowl, I'd root for the Bengals. But I guess he's not. So Philly is the closest thing to New York, so we'll see. Wow, Melissa 2087 has just sold my dad's house. It was in complete need of renovations. We listed the home for $180,000, hoping for something. We got 20 offers in 2 days, and it sold for $240,000. Whoa, crazy. So where was this, if you don't mind us asking, Melissa 2087? I'm assuming not New York, but maybe I shouldn't assume that. Now, talk about a crazy, crazy housing market. So the average 30-year fixed rate mortgage, I think at the time of recording this video, is 6.5%. And that's supposed to put a lid on the housing market, which it has if you look at existing home sales. They have been in steep, steep decline, but 20 offers? That's insane. That's wild. Wow, Terry's is my granddaughter just found out she's been accepted to NYU Law School. Dude, that's awesome, man. Wow, Terry, congratulations to you and your family. That's a fantastic achievement. Now, when I was at the closing bell ceremony at the New York Stock Exchange, there was actually a lot of NYU Stern students that were in attendance. And these are really, really smart kids. So, you know, if you can get accepted to NYU, that is a really, really good accomplishment. I know I could never do that. I went to a CUNY school here, but that's an awesome, awesome news. Let me know if you need any help with the apartment hunting, if you need any recommendations for neighborhoods or anything like that. But congratulations to you. It's fantastic. Melissa 87 says so the home was in central New Jersey. Okay. Got it. Look, that's still good. It's still good. Now, I'll give you guys some context on my neighborhood that I live in Miami. Just recently, okay, and I'll post the Zillow listings. A quick update. I just finished doing the migration from Review. So if anybody doesn't know, Twitter owned Review, which was the newsletter service, which we used to have our newsletter on. It got shut down, so I had to do Substack. So anyway, besides the point, there was 3 homes that just sold in the last 30 days, all above 500,000. And the neighborhood that I live in Miami, these homes do not sell for $500,000. Let me just be very, very blunt up front, okay? Like, these are crazy prices. So for all of these people that are talking about Armageddon, the real estate market's gonna crash, I mean, guys, these are 3-bedroom, 2-bathroom homes that need work. I'll send you guys some of the listings. Maybe I'll post it in the Discord. But one of them sold for $500, the other one sold for $510, and the third house sold for $555. Now, here's what I think is happening. But let me show you guys the Empire State Building first. This is more important. Check it out. Check out how beautiful the Empire looks. Now, here's what I think is happening in this particular neighborhood in Miami. I think it's a lot of people from the north, right? Long Island, not necessarily only New York, but the whole Northeast. Oh, we got the FDNY coming. You know, they're used to looking at homes on Long Island. They're used to looking at homes in New Jersey, where, you know, a 3-bedroom, 2-bathroom home could literally go for $650,000 to $750,000, depending on which neighborhood you're looking. So I think a lot of these people from the north that have very high-paying salaries that they could work remote, they come into these neighborhoods and they say, wow, I can get a house for $500,000. I'm just gonna buy it in cash. And they think it's just like the cheapest thing ever, right? But if you actually go to the MLS and you look back 4 years, these homes were selling for $350,000, some of which were selling for $275,000. So think about that price appreciation. That is wild price appreciation there. Crazy. Wow, Melissa 2087 says, I was working with the realtor and she's been doing it forever, and even she was surprised. That's crazy. Well, here's what I think may be happening there to your dad's house. So you said it needed work, right? You said it needed repairs. It's probably some sort of, now I don't know, I'm just totally guessing. It's probably an investment company that is gonna come in there and gut renovate that property, if I had to bet. I highly doubt it's probably somebody that's gonna live in it. I think it's an investment company that's gonna buy it for $280,000. They're gonna put $70,000 in it, and they're gonna put it on the market for $500,000. That's what I think is probably going on there. Especially if you said it needs a lot of work. They're probably gonna buy it for $287,000. They're gonna put $70,000 into it, and they're gonna flip it for $500,000. We'll see if they can do it. I mean, keep us updated. Wow, Terry says she scored a perfect score on the LSAT. Unbelievable accomplishment. We are just beaming. She wants to live in Battery Park or Tribeca. Bank accounts are already feeling light. Ha! Hilarious. Well, look, Battery Park, she definitely has good taste in neighborhoods to live. I'll tell you that. But look, Terry, if you want to shoot me an email at Walks Wall Street, I'll give you some insights on a lot of really nice and safe neighborhoods. And I'll hook you up. Miller says, Tom, there was a grand opening today in Miami. Hence the opening was that of St. Thomas University Benjamin Elcrum School of Law. Wow, top 10 most prestigious law schools? I didn't know that. I have no idea what that is. That's awesome though. Melissa 2087 says, yes, they originally sold it to a flipper for $220,000. A lady came back who wanted to live there and bid $240,000. Wow. So the flipper came back with $240,000 and we finally closed with him. Yeah, that's crazy. And here's the really crazy thing. I'll bet you anything, if he lists that, and again, I have no idea where this is located, but if I had to ballpark it, if he lists that for $450,000 and the place is mint, I'm talking about you don't have to do anything to it, I think someone would bite on that. I think that would sell. I think that would sell. All right, guys, we're up on the 2-hour mark. I gotta take you guys back to 57th Street. I gotta go back to the office. Now, if you notice, I don't like walking around with my computer and all my stuff, my work stuff, because it's like 6 or 7 pounds in my backpack. So I always leave my stuff back at the office. So I'll take you guys back there with me, might as well. Wow, Bryce's real estate here in Michigan is crazy since 2020. Even my neighbors from California, the most expensive homes in Grand Rapids area, are buying a bag of popcorn, or like buying a bag of popcorn to a Californian. Yeah, 1,000%. I think you're right. I mean, in my neighborhood, you know, it's just wild. A lot of new families I'm noticing moving into my neighborhood. A lot of new families with kids, which is a very good sign. Now, I will talk about the downsides. The downsides is the property taxes were freaking screaming spitfire through the roof. I got whacked with the property taxes, but the optimist that I am, I always look on the bright side and reframe the negative energy. So if my property taxes doubled, which I was expecting that they would be, you know, think about all the people who bought homes, right, during the pandemic, have good jobs. Now they're paying ridiculous property taxes. The state of Florida, here's the main difference, I would say. especially if you're going to move to Southern Florida and you have kids. Now, if you're used to Long Island specifically, or parts of New Jersey, we have very, very good public schools, especially on Long Island, some of the best in the entire country. You can't really say the same thing about Southern Florida. So what I'm thinking is, with all of this tax surplus coming in from the property taxes, that's all of that additional money is probably going to go to improving the schools, which I am totally willing to pay that, right? Because you got to understand this. I think where I differ from traditional conservatives is I have no problem getting banged over the head with the taxes. I really don't. I paid them in New York all my life. I mean, it's sick the amount of money I paid here in taxes, especially with income tax. But I care about the representation, right? If I walk around the city and I'm stepping over people, popping heroin in Penn Station, and I'm paying ridiculous taxes, I'm not going to be happy. If I hear that the public schools are not good, but we're paying record taxes and state income tax and property taxes, I'm not going to be happy. But if I'm paying through the nose in taxes, but then I get a good report where kids are excelling in school, the college admission rates are going up, the amount of kids that are graduating high school is going through the roof, well, then I'm fine, because I'm not a sociopath. And when you have an educated populace, that means people are going to get good jobs. And when people get good jobs, they just tend to start families and buy homes, and the cycle repeats, right? And that's how you build generational wealth. So maybe that's looking on the bright side of things, but yeah, my property tax is freaking crazy. Zozo Bob says, Tom, there is a property tax cap in Florida unless it's not your homestead. Yeah, so Zozo Bob, you're correct. But here's the thing. The first year that you buy the home, right, you pay the very, very low rate. And when you put in the homestead, it still re-rates to the purchase price appraisal. So your property taxes cap at that new appraisal value. You know what I mean? So even though for the first year, I only paid like $4,000, I put in the homestead, right? I do homestead. It is my primary residence. And there is a cap, but it's re-rated to the new appraisal value, which is, I mean, look, it sucks, but you got to pay taxes, so. Oh yeah, Vinny Castellano says, I miss New York City. How has the move been, Vinny, to Iowa? Hopefully everything is going smooth. Hey, Shadow Stocks is in New York. They are wasting tax money to increase the government, not benefit the people. Yeah, I agree with that, Shadow Stock. I definitely agree with that. It's going to be really interesting to see how this plays out in New York City specifically, because subway ridership is still down significantly from the pandemic. So one or two things are going to need to happen. It's either they're going to have to impact service, right? And what I mean by that is there's going to be less frequency in the amount of trains that run, or they're going to have to raise taxes again. And I don't know how people can do it if you live and work in Manhattan if they raise taxes again. If you make, $1.50, $200, you're paying well over 30%, 35% in taxes here, which is crazy. Shadow Stocks says New York City is screwed and taxes keep going up. Yo, Brad's Brain, good to see you, man. Welcome. News Banger says, yo, love your channel. Do you use your phone?
A couple of times?
Yeah, I do. I do use the phone. So we stream live with iPhone 13 mini. Way in the beginning when we started these, we tried to do it with the GoPro, but the setup is so cumbersome and it's a big pain, and it's almost impossible to read comments. Shadow Stocks is run the government like a hedge fund, don't perform for the people, and you were fired. Well, I don't think that's ever going to happen because that would make too much sense, right? And, I'm not anti-union. Because I think that would be a little bit hypocritical of me to say I'm anti-union, because in full disclosure, I really got my start from being in a union. And when I was in a union, I was still in college, and I was getting, crazy benefits. I was getting tuition reimbursement. I got a ton of certifications in networking, and which really helped me get a really, really high-paying tech sales job. I was in Local 1101 here in Manhattan. And I will say this, more so on the construction side of the house, in those type of unions like Local 13, Local 14, operating engineers, it's just, there's a lot of waste, I'll say that. I won't say anything else. There's a lot of waste. And a lot of fraud, too. Okay, we are passing Nürburgring Berman. I got a good buddy that's there. Always like to shout him out. Hey, Bernard, it's good night, Tom. Enjoy your tour around the city. Thank you so much. Appreciate it. Wow. Yeah, Duda. That's another major problem that's going on in Miami, too. A lot of people that own condominiums, their HOA fees are going up so high because after the Surfside condominium collapse, there needs to be some serious repairs done to a lot of these condominiums. So here's what I would say. If it's not a new condo, I wouldn't buy. I would rent. If it's not like a brand new condo, I would not buy in Southern Florida. I think you're asking for major trouble there, guys. In my view. So that's a really good comment there by Duda. Really good comment. I think that'll help a lot of people. Man, the halal guys, the smell. It smells so good, but I can't eat any of that stuff anymore. Hey, Pineapple Water says, hey Tom, I wish I was the eternal optimist. I look at the excise taxes. I'm happy to pay them, that I have a roof over my head. Yeah, you're right. You're correct. Well, I mean, if we go back to the Constitution, right? I think we just need to go back to the Constitution. No taxation without representation. And, with the amount of tax dollars that this state makes, and it's not only New York, we're just talking about New York because we are in New York. But with the amount of tax dollars that this state brings in, there could be significant improvements. My buddy just texted me. My buddy works in private equity, and he's hammering us in the group chat, spamming us in the group chat with all these photos of Dubai. And he's like, I cannot believe how beautiful and clean. He's like, I just can't believe it. Like, he's having a heart attack, obsessing and sending his photos of Dubai. He's like, guys, and my friend is kind of like me, super rah-rah USA, super gung-ho optimist. But he's like, I don't know. He's like, it sort of puts the United States infrastructure to shame. He's like, everything is super clean. He's like, there's virtually no crime. He hasn't seen one homeless person. And it just feels like everybody takes care of each other over there. I don't know. The trains are nice. The airport, he said, was just unbelievable. I don't know. I think we need to do a complete rip and replace of the infrastructure in the United States. Anyway, guys, I gotta wrap it up. We're over the 2-hour mark. I gotta get home. I gotta be up early. Have some meetings, but not to fear. We will be back tomorrow live from New York City. So if you're new here, feel free to click the subscribe button. We go live about 5 days a week between New York City and Miami at 8:30 p.m. Eastern time. Hopefully tomorrow we won't have all of these technical difficulties with the buffering. I know a lot of tech companies have been having problems. And we will continue our conversation about the Federal Reserve. We'll talk about Uber's earnings. Maybe we'll expand on Chipotle's earnings a little bit. We forgot to talk about that today. And that's it, team. Thank you for coming out. I appreciate it. Hawaii, Richard Vogel, Shadowstock, Sunshine After Rain, B. Smith, Joan K. Joe Driver, thank you so much. Abdullah, Vinny Castellano, TC. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. See you guys tomorrow. Follow Walks Wall Street on Twitter if you want to stay connected there. And we'll see you all tomorrow. Take care.